So we just got two major things happen today, and one of them is a lot more catastrophic than the other. However, the market didn't really take it to be like that. In fact, it actually took it pretty positive because of what it could actually mean. And what I'm mainly referring to, guys, it is, of course, the massive payroll downward revisions that just happened today, the 9th of September. Oh my goodness. We are talking about the worst revisions ever made. Now, last year we had a revision that it was upwards of like 800,000. Well, this just beat it. Seriously, it beat it by about 100,000. We got payrolls face massive downward revisions due to faulty birth death model. Pantheon Macroeconomic said, I don't believe this for a second. The preliminary benchmark revisions of March 2024 payrolls has been dramatically revised downward by a whopping 911,000 jobs, primarily due to flaws in the birth death model used to estimate employment changes, according to Samuel Toombs, chief U.S. economist at Pantheon Macroeconomics. The gargantuan downward revision is probably mostly due to the faulty birth death model, he said in a note, noting that this adjustment implies payrolls actually rose at an average of monthly pace of just 73,000 in the 12 months to March, significantly lower than the expected 149,000 estimate. That massive downward revision. This represents an unprecedented scale of correction in historical context. Toombs said, adding that this is an enormous downward benchmark revision by past standards. Oh yeah. I mean, I remember last year when we got this revision, we were like, this is awful. We just lost 818,000 jobs, which you can see right here. He pointed out that even exceeds the preliminary benchmark revisions of March 2024 payrolls announced last August of negative 818,000, which eventually was revised to negative 598,000. Guys, this is basically what is getting people so upset. When Trump last month, he basically fired the BLS head. This is the reason why. This is literally the reason why. How can these numbers be so off? This is the part that really just annoys everybody because they should not be this off. I get it. You're basically taking count of an entire country. But man, to be this off every single time, it kind of gives credit to when Trump has been saying all this time, hey, they're cooking the numbers. They're cooking the numbers. The Fed needs to cut rates because the numbers aren't this good. The numbers are not this good when you need to cut rates. We're finally starting to see it, right? And according to, I guess, him now, these are the quote unquote real numbers, which, yeah, it's not looking good, right? It really isn't looking good. The article says birth death model. I call BS on that. I call the fact that it's probably just that last year they were cooking the numbers for obvious reasons. And now that this is no longer the case, we're starting to see the real number. In fact, we were even saying this in the past couple of years, saying that, hey, these numbers are probably going to be shown a whole lot different if he were to get into office. And right now we're starting to kind of see that. So we shall see what in the world happens with this. But I mean, markets absolutely love this. Because the S&P basically popped. The S&P just basically popped, gaining 0.27%. And if we actually take a look at this on the day, we did get a pretty, at around 1040 or so. It did stumble a little bit. However, it basically recovered afterwards, ending the day at a positive overall. And not just the S&P 500, but the NASDAQ as well, and the Dow Jones at 0.43%. So basically everything recovered after those numbers came out because of the fact that now this gives credit to the Federal Reserve cutting rates. In fact, looking at the CME tool, this thing just shot up even more. This was at around 89% a few days ago. And now, after today's numbers, we are currently sitting at 93. Wow, absolutely crazy. And that's a 93 for 25 basis points, where we're at 7% for a 50. Now, depending on what the CPI comes in, by the time you guys see this tomorrow, or even PPI today, which you guys would have already known what PPI would have come out of, this thing could easily shoot up to 50. Now, the narrative, it really is what matters here. Because it all depends as to what these numbers actually come out to be. We can see that we already have expectation for non-core CPI, and they're expecting a 0.2% increase. Previous was 2.7. They're expecting 2.9. And, well, odds are, if we get CPI actually to come out to be, which, by the way, the president and Jerome Powell already know what this number is. If we see this number come in at 2.9 or lower than 2.9, let's just say 2.8 or roughly the same, 2.7, you could definitely assume that markets are going to skyrocket. Not because inflation is going down, but because inflation is down, and now the Fed can actually change from focusing on inflation to now labor markets. And by doing so, they would ease the gas on the overall inflation narrative. Therefore, they could cut interest rates 25 basis points or more aggressive 50 basis points. However, if this inflation number comes in higher than 2.9, 3.0, 3.1, the narrative might be, stagflation. We're losing jobs, right? Because of the whole jobs numbers being completely destroyed, as well as now we're getting higher inflation than expected. The Fed cannot cut rates. What do you do in this situation? And this is basically what's going to determine whether or not markets shoot to the moon on Thursday or crash very, very badly on Thursday. It really just depends as to what the narrative the market plans in its own little head, right? It really just depends up to that. But with that said, guys, let's move on to now something that happened within these past 2 days that I would just like to pat my back here a little bit. I don't mean to boast, but basically we kind of called this. We kind of called this several months ago, and hopefully if you guys are seeing this, I'm telling you right now, there is still time. You're still getting into this at a great valuation. Please do not get discouraged just because you've seen this thing do this within the past 3 days now. Understand that you still have the opportunity, but man, were we correct when it came to United Health, because on the 8th, United Health pops after annual earnings outlook reaffirmed. Interesting. Now, if you guys know, United Health has been through a ringer, right? I mean, you got the hack that happened in 2024. You got the CEO being murdered. You got the DOJ probes, which completely just crashed the stock from like 600 down to like 300. It was nuts, right? It was absolutely nuts. 50% cut right there. And, well, we could see now that they are basically saying no. We are still reaffirming our outlook for, we're still reaffirming our outlook over here. Shares popped 1.3% pre-market on Monday as the health insurer announced plans to reiterate the adjusted EPS outlook for the full year of 2025 in a meeting with investors and analysts this week. The company projected adjusted earnings of at least $16 per share on $445.5 billion to $448 billion in revenue. Analysts currently expected to earn $16.24 in revenue of $448.2 billion in 2025. So we can see that they are under what they're expecting. However, it's consistent. They're not going to be even lower, which actually gives people positive outlook when it comes to UNH. However, things just got even rosier for United Health. In fact, let's take a look at this, because today United Health rises after Medicare star ratings update. UNH added 4% on pre-market on Tuesday after the managed care giant said that based on initial data, roughly 70% of its membership could be enrolled in its Medicare Advantage plans rated 4 stars and above for 2027 payment year. As part of the star rating system, the U.S. Center of Medicare and Medicaid Services, CMS, rewards healthcare plans with 4 or more stars with annual bonus payments, and plans with higher ratings are entitled to higher bonuses, and UNH just got 4 stars. So I love it because on one end, the government is literally going after them over a DOJ probe over malpractice, and then at the same time, the same government just awarded them 4 stars. So, that's a little bit neither here nor there, tongue in cheek, I guess you could. I wouldn't even say tongue in cheek. Neither here nor there. I don't know. It's just stupid, right? It really, really is. But they did pop nonetheless. And while the data is not final and requires further evaluation, the estimate aligns with the company's previous projections and historical results. UNH added in a regulatory filing on Tuesday. Again, there doesn't seem to be any issues with UNH. In fact, the DOJ probe expanded recently because they couldn't find anything in what they were looking for initially. But just to add the little cherry on top, we got the big man himself, Warren Buffett's Berkshire Hathaway buys over 5 million shares in UNH Group. Warren Buffett finally did it. He bought UNH, and we don't really know exactly what price he bought it at, but we could definitely tell that he did buy it at a pretty good price, right? At around $300 or so. And as of right now, we can see UNH currently sitting at a whopping $347.92, up 8.64%. We can see that this chart does not look pretty at all, going as low as $234.60, and the overall 52-week high was $630, so basically cut in half. And right now, we can see that on the year to date, they're still down around 30.75%. So it's still down a massive amount, right? Still down a massive amount. On the 1 year, they're down 41.34. So even though they did have a big jump today, a lot can happen. There could be some taking the profits here and there, but the overall, I guess, mentality is that the company is fine, right? And this is basically what we have been saying this whole entire time here on the channel, guys. It doesn't make sense for this company to go to zero. A lot of people were fighting me. A lot of people were saying so many things. And I'm just like, the fundamentals, A, don't show it. And number two, the CEOs are basically not showing this stress about it. And you also have insider trading or insider buying at a massive rate. Something is clearly not being told to us, and we're kind of just holding the bag because of fear. Again, do not fear, guys. Do not fear. It is scary, don't get me wrong, and UNH is something to definitely take a look at. But again, if you take a look at it and you are convicted that it's still going to be fine, which I was, it's not the time to panic. It's just time to keep a cool, leveled head. So with that, let's just do a quick discounted free cash flow on UNH, because, we don't need to take a look at the fundamentals. Again, this was a company that I looked at and I was just like, this thing has fake fundamentals. It looks so perfect. It looks fake. It looks like I purposefully input the data in a way that it makes it perfectly linear or perfectly parabolic. So it's a great company. Fundamentals are great. Last year, they had a small dip. It was actually mainly due to the cybersecurity breach, not anything to do with the DOJ. So just keep that in mind. Now, when it comes to the discounted free cash flow, we got average revenue to free cash flow growth of 6.2. We got average net income growth of 23.5, and average share change buying back at around 0.87%. Now, I'm going to put, guys, 5, 6, and 7% for the free cash flow to revenue growth. For the net income growth, 15, 18, and 21%. For the PE, I'm going to say 18, 20, and 22, which, if we actually take a look at the current PE, is currently sitting at 15. So we're very, very close to this, to my projections, right, in general. Very, very close to my projections in general. So let's come back down over here, and we can see that the average share change, I'm going to say -1. I'm going to issue shares at 1%. 0, they're going to keep it the same, and buying back at around 1%. And then for the discount rate or weighted average cost of capital, let's say 8, 7.5, and 7%. Guys, these numbers look real. It looks kind of crazy to think that the company should be worth $916.57 all the way up to a whopping $2,200, right? $2,250 basically. Guys, the company is great. The company has great fundamentals. 1 year off year because of a cybersecurity breach. They themselves even said it was a one-time thing. It wasn't going to happen again. Yeah, this company, if they would have never been slashed in half because of the Wall Street Journal putting up the story of the DOJ probe and causing a lot of panic selling, this company should be upwards of like $1,500. I honestly, truly believe that. This company's amazing. It really, really is. So again, does it suck that it went up today 8%? Yes, but if my numbers are real, if my projections are real, if my discounted free cash flow is anywhere in this ballpark, you still have a lot of room to go up. Assuming the median, you still could run about $1,000, which would be nuts. Not to mention, you also have a sweet dividend as well at around this price tag. So again, not financial advice. Every investment is the present value of all future cash flow. This is why I give out this calculator for free. It is the 5-year version, but you guys can still use it for free, guys. And again, this is what I use. It's not the end all be all. Nothing is the end all be all. Use different things to tell you different parts of the story, so that way you can get an overall basic picture of the puzzle, right? You know, this piece up here, this piece up here, this piece here, this piece here, and this piece here. You don't have all of them, but you get the general idea of the picture, right? So that's just, guys, my 2 cents on it. And we shall see what happens when it comes to CPI on Thursday. And let's keep an eye on UNH, because by the looks of it, it's going to keep running. It really, really is. So with that said, guys, make sure to like, subscribe, comment. Really does help with the algorithm here on YouTube. That's what I'm make sure to follow us on XFL Investing. And of course, if you'd like to join us on Discord, the link to that is in the description below. So with that said, guys, peace out and have a blessed day.